Section 8, the 3 cornerstones of intelligent financial planning. Now I've got 3 pots on the board. I'm going to go through them in priority order. This is quite common sense stuff, but many people overlook this if they don't get professional advice. Now the very first pot when it comes to financial planning is the insurance pot. Now insurance divides opinion. Some people see it as extra money they would rather spend on themselves, others as a necessary evil, and then some people love it. Predominantly people tend to begrudgingly take insurance, but there's one determination question you need to ask yourself with any type of insurance, and it's basically, if this event happened to me, do I have the funds to cover it? That's not going to make a significant difference. In other words, let's say if you were made redundant and you were out of work for 6 months, 12 months, do you have the funds to cover that so it's not going to make much difference to your life? If the answer is yes, you don't need it. If the answer is no, then you seriously need to consider getting it. Okay, it's really as simple as that. An example, let's say it's an extended warranty on a new washing machine. You pay 300 quid for a washing machine, you get a year's warranty, and then they want to sell you an extended warranty for 90 quid. You might think, okay, well the chances of needing that are slim, I'll take the risk. Ultimately, if it breaks down in 2-3 years, I'll buy a new one. Okay, you know if the value of that potential insurance, so you've got to make that decision. Now it's very easy to avoid insurance thinking it's an extra cost, but it's all about putting it in the right perspective. Now as you go through the written program in section 8, you'll see this, because what we've done, put it in a way that makes you think differently. Let me give you an example. Now let's say in your house you've got a cash machine. Your monthly income we say is 3,000, and how this works is first of the month, every month you go to the cash machine in your house, press a button, and it gives you £3,000 worth of cash, month in, month out. It's magical. You just press one button, it just spits out £3,000 cash. Only does on the first of the month, and it does it every single month. Now this cash machine is in your house and it's under your control, but you can only take 3,000 out on the first of every month. Now the question is, because it's under your control and that's your income, the money you live on, and it's very, very consistent, but it's a mechanical device and it's connected to a computer terminal electronically to know what to give you. So it could break down. So the question is, if you could insure that machine to make sure it spat out £3,000 cash on the first month every month, would you insure it? Because if it breaks down, all of a sudden you might be out of income for 2 or 3 months. Now the chances are in that scenario you would. Let's say it costs you 40-50 quid to insure it, so you're guaranteed to get that 3,000 cash on the first of the month every month. Most people would say yes, I'll take it because I don't want the risk. Okay, now what I've just described there is income protection. And that is the scenario thinking, okay, I've got income, or it might be accident, sickness cover. If I were to have a loss of income for so long, could I continue with my current financial setup? If you've got plenty of savings investments, the answer might be yes. If the answer is no, I'd struggle or I'd be under pressure, that's when you consider it. Okay, so when it comes to insurance, we're talking about protecting goods. Car insurance you have to have, home insurance is important. There's things like income protection, life insurance, critical illness. If a critical illness could wipe you out or put you in serious strain, consider getting it. Now when it comes to insurance, this is where I strongly advocate professional advice. This is what I used to do. So at least you're given the option, you decide if you want it. Using the determination question, you'll see in the written pack, we talk about life insurance, income protection. We put them in a different perspective so you understand what it is. With all insurance, okay, of course it costs money and people begrudgingly pay it. It's peace of mind you're buying. Okay, but if you look at your circumstances, ask that question, do I really need this? Could I cover it? If the answer is no, that's when you need to seriously consider it, if it's worth it. So you buy in peace of mind. Okay, right, that's enough insurance. Very, very important, because one bad event could wipe you out, or cause a lot of misery and distress, where you could cover it for a few pounds per month. Okay, so that's number one, insurance, very important. We start there. That's your first priority with financial planning. Number two is savings. Two types of savings, which we'll cover more in later videos. First is emergency funds. Let's say savings as part of your net worth as a backup, which could cover this. Have a direct bearing on your insurance. And the second one is saving to spend. So you're saving to spend, you're saving up for a holiday, a new car, because you're going to buy it. That's one type. This is savings to keep as a nest egg or an emergency fund. Okay, very, very important. So that's your first priority. Then you fill up your savings pots, and then once they're in a position where you've got plenty of savings, backup, emergency funds, you then go investment. Investments could be stocks, shares, property, antiques, classic cars, whatever. The difference between savings and investments: savings is risk-free, low return, risk-free. You're getting a small return on the money you put away. Investment has an element of risk, but it also has the potential to grow into huge amounts of money. Okay, so you'll see more in the written section, but that's your priority order of intelligent financial planning. Take care of your insurance, good savings plan in place, and an investment plan. So that's where your long-term net worth comes from. This takes care of your immediate needs. This is your emergency funding, and that's your real growth. Okay, that's how you would start from scratch, but it's still a very important thing to look at and make sure you've got those in the right order. And as we always say, please consider professional advice. Professional advisors are trained to do this for you. Look at your circumstances, making sure you're protected and you've got things lined up to where you want to go financially. Okay, I've done enough on this one, so please have a good look through the written section, and I'll see you on video 9.